Good morning and welcome to the Option Pit AM Volatility Report. I'm Mark Sebastian, founder of this company. So let's talk about the markets. Well, not the prettiest day in the world for the S&P 500. As we're talking, the S&P's down about 34. Now this is $6 off the low. We've seen VIX threaten. You see VIX right here. We've seen VIX threaten 23. And I've seen SPY and SPX down 40 plus. They've backed off those numbers. They still look a little peakish, but they are not at session lows right now. Now we were just talking, Andrew and myself, and talking to a few other people as well. And this is one of those weird market days where you're coming off of a long weekend. Trading day of the year. It's related to China, not U.S. stuff. And so you don't know whether somebody's going to hit the buy button, whether we're going to sell off 60, whether this is the beginning of multiple days of selling or the beginning or just a one-off event. This is a very opaque time to be looking at volatility. And the way VIX is moving, I mean, we've got a nice move. It's up, $3.50, and the futures are moving nicely. If you look at the futures, they're up, $1.95. But for being down, gapping down almost 40, I'm not sensing a panic to the market today. Maybe people believe that there's a little bit of a January tax selling stuff going on right now. Maybe people are simply looking at the futures and saying, I think 22 VIX is enough. But if you pay attention and you concentrate on what's going on, Jan is now trading at a 30-cent premium to February, which is trading at a 10-cent premium to March, and is trading below but flat with April. So we've got a curve that is now backward out 3 months, albeit very slight. All right, market expectancies in a backward market are extremely negative. Extremely negative. So it's something to be watching. What is going to go on? What is happening? All right. Now is a time where if I'm a rule-based system, all right, I have my own set of trading rules, trading operations that I do. These are the time where those rules can go haywire, where things cannot work the way one might be expecting. And that's because the market is at its most illogical when VIX futures are backward. So that's just something to be aware of. And part two, volatility begets volatility. All right? We spent a lot of time talking about VIX mean of 20. Well, we just spent 3 years with the VIX really not touching 20 very much. And now we could be in a period where VIX is repeatedly touching 20. So one's going to have to change their mindset for 2016. All right? The trading that worked really well in 2013 and 2014, likely out the window. The trading that works in 2016 may be more like 2015. It could be more like 2007 or 2011 or 2008. We don't know. But I can tell you one thing, just from my gut, I do not feel like this is going to be a similar year to any of the last couple of years we've had. So just be on top of it, be aware of it, and be ready to trade it. And just understand that there's going to be some volatility. And as Andrew wrote on our last post of the year, 15 is the new 10. 14 is the new 10. There is now a low bound to the VIX, and it's 4 or 5 points higher. And there's really no upper bound, so who knows where we could go. Final thought on this sell-off, when I look at this sell-off, I see something that, again, I'm not sure what it is, but is it the type that has potential to be a down 60-day, followed by another down 60-day, followed by maybe an all-out panic sell, and then market volatility for a few months? Yes. All right, especially if China really does melt or completely fall apart. But I'm just not sure exactly which way things could go. I don't know yet. And that's what happens when you gap down on the first day of the year, because China is off 7%. So just be aware of what's going on now. And some of the individual names, I mean, look at Amazon getting slaughtered. Look at the tech stocks. I mean, I don't understand why the airlines are down. That seems a little silly. I mean, I understand that oil's up today. But you've got Apple getting smushed. You've got Apple's down 2.3, light relative to everybody else. Alibaba down 5. Dollar General not really doing much. But I mean, if you look at all the tech names, a lot of the tech names, Google and Apple look relatively strong. Amazon and Alibaba looking weak, and some of the airlines that just look dirt. You know, they're getting punched in the face. Those might be interesting plays today. All right, folks. Netflix down 7% today. You got to watch for those high flyers. All right. Yeah, no, it is oil related. Somebody mentioned maybe it's because of oil. Yeah, I think it's part of it's oil related, but you know, if you look at oil, just real briefly, USO, it's up some, but not enough that the airline should be feeling a major pinch on it. All right, it's up $1. All right, folks. On that note, I'm going to wish everybody a good day.